So good morning, everybody. Thank you for joining us for this month's fraud webinar. We're going to start the session with a quick round of introductions. I'm really delighted with the guests we've got today. I know it's going to be an informative and inspiring session, and I'm hoping Tamlyn will really open up about some of the cases that she's worked on, and Michael's experience within the technology sector, working within the accounting market is second to none. So I'm going to start off with a quick intro because there's some people that won't know me either. So my name is Oliver. I'm the co-founder and the CEO of fraud prevention software called Maisie. I've spent 15 years of my career working in e-crime investigations and digital forensics. And at the beginning of last year, had just had enough of mopping up the aftermath of fraud that was affecting small businesses. A lot of the cases I was working on were preventable fraud. And I decided to start Maisie to combat and help businesses be proactive, and specifically working within the accounting and bookkeeping market to empower accountants to be proactive for their clients to stop fraud before it happens. And I'm going to just go around my screen with my esteemed panelists today. I have worked with Tamlyn, I think, in a few cases in the past. And obviously, Michael, we're a fairly new relationship, but he's a guiding light in the industry. So I'm going to pass the microphone over to Tamlyn to give us a quick introduction from your side, and then Michael, if you wouldn't mind, afterwards giving a quick roundup. I'm sure most people on the call will know you, but just in case. So Tamlyn, if you wouldn't mind, just a short intro.
Yeah, thanks, Oliver. Good morning, everyone. I'm Tamlyn Edmonds, and I'm one of the founding partners of a law firm called Edmonds, Marshall McMahon. Now, we specialize in private prosecutions. We set up in 2012. And by background, I am a prosecutor. I've been a prosecutor for the last 20 years. We used to head up one of the government prosecution teams, so specializing in serious fraud and counterfeiting. And the reason we set up EMM, Edmonds Marshall McMahon, is because we identified that there were certain types of offences, particularly fraud, that was no longer the priority of the state. They weren't investigating, they weren't prosecuting. So that's why we set up the firm, to really, fill that gap in the market, to offer the service to prosecute where the state aren't doing so. And I can talk a bit more about private prosecutions later.
Great, thank you very much. Michael, from your side, if you mind just giving a quick overview.
Sure. Hi, everyone. So my name's Michael Wood. I am the CEO and co-founder of a software business called Translucent. Previously, I founded a business called Receipt Bank that is now known as Dext. So that business was all about scanning receipts and invoices and things for over 1 million users around the world, and more than 10,000 firms of accountants and bookkeepers around the world. So in my time, I've looked at an awful lot of small business transactions. Transactions here, obviously meaning sort of invoices and expenses. And my newer business, Translucent, is all about helping those slightly larger small businesses who are trying to do multi-entity or sort of stringing together. They have multiple entities. So those larger businesses using Xero and QBO and other systems, but it's trying to string them together into a single system. So that's what we're working on there.
Great, thanks, Michael. And that's very apt. So the session today is to focus on a specific case that we've called out that Tamlyn led the prosecution on. But it's not an uncommon case, but it's one that sits across group company structures. And I think that's something that where the structure of a business can potentially aid and mask fraud being uncovered when there's some complexity in the way that the accounts and the structure is in place. So this case in particular is involved, the perpetrator was known as, was called Gerard Lawless. Tamlyn, if you wouldn't mind giving us an overview just to set the scene on what was involved, what did he do? And we're going to maybe ask a few questions around the case just to paint the picture for us, because it is quite a typical fraud that's happening. And it'd be good to get an overview from you to start off with.
Can I jump in? It does seem an incredible bit of nominative determinism as well.
What, the name?
Yeah.
Yeah, exactly. Great name for this case. Yeah,
we didn't make that up.
Yeah,
Yeah.
exactly. Yeah, no, so if I just give you a brief summary. So Mr. Lawless was employed in 1997 by one of Vince Tickell's marketing companies called Carbon. Now, the Carbon was based in Hertfordshire, and Lawless was employed as a financial controller for that company. Now, he was an unqualified accountant. So when he started off at that particular company, he was on a salary of about 25,000 a year. And that rose to 65,000 at the time that the fraud was discovered. Now, over the years, his responsibilities for the company grew, and there were lots of different companies within the group. So he then became financial controller of the entire group, including a company called Hunter Worldwide. Now, throughout the years of working for Vince, Lawless and Vince became really close friends. Vince trusted him implicitly. So, they would socialize with each other. Their wives were great friends. They attended each other's life events, so weddings, significant birthdays. And Vincent really, really trusted Lawless to such an extent that he said to his wife, look, if anything ever happens to me, you need to go to Lawless because he knows everything about my financial situation. He knows everything about the company. He is the eyes and ears of the company. That's how Vince described him. Now, unfortunately, Lawless really breached the trust that Vince gave him to such a significant extent that he stole over 1.7 million out of the business over a 10-year period. And he just spent that money on himself and his family. So how did he commit this fraud? Well, he did it in a number of ways. One, he was a trusted employee of the company, so he was given a company credit card to use solely for company expenses. Now, he wasn't in a sales role. He didn't have customer-facing roles. And so therefore, it was expected that his expenditure on that credit card would be really small. He was financial controller, so obviously he had access to all of the company bank accounts. Now, there were strict limitations on the transfers between all the various different companies at the time, and he was only authorized to make payments for the interest of those particular companies, but he was the one that had access. He also had access to all of the various companies' checkbooks, so he was permitted to write checks just for company expenses. And he was also responsible for maintaining all of the internal accounting procedures for the firm, so for the company, so making VAT payments, tax payments, all payments relating to the company he was responsible for. Now, one of the ways in which a newly found company within the group grew was through loans from some of the more established companies within the group. So Lawless was entrusted to manage all of those loans and all of these intercompany transfers between the companies, as well as all of the payments in and out of the company. So he really had this trust. He had such trust within those companies, and often there's a lack of scrutiny that's inherent in smaller companies. So he really abused that, which meant that he was able to spend lots and lots of money on himself and then conceal his crime. So just to give you an example of his spending, he spent over £500,000 on company credit cards for his own personal expenses. He spent 24,000 on wine. He spent 50,000 on holidays for himself, 24,000 cash withdrawals from the credit cards. It's £20,000 to John Lewis. He made checks out to cash to about 130,000, which he then spent on luxuries for himself and his family. And then he would put fake entries on the corresponding check stubs, and he falsified all of the Sage accounting records. He transferred over 700,000 to his own and his wife's personal bank accounts. And then again, he falsified those records in the Sage payments. So he would disguise those payments for part-time staff salaries. So he would just constantly make those payments. And he also paid off his own and his wife's credit card bills to a total of about 330,000. He went on the amazing holidays. He had luxury holidays. He went to international football games, rugby matches. He loved golf, so he would go off to these luxury golf trips. He would often pay for his friends also to go. He spent 230,000 over 5 years in staying in 5-star hotels. He also spent £15,000 of company money on a 4-day skiing break for him and his wife, where they stayed in one of the most, expensive ski resorts in the world. And he also even paid for his son's wedding using the company money. And that was a wedding that he invited Vince and his wife to. So unbeknown to them, they're drinking wine and champagne, which they have in fact paid for. So he did all of this without detection for many years. And how did he manage to do this? Well, he was employed from the very beginning when the company was in a startup phase. So he was instrumental in setting up all of those accounting systems and processes within the company. He was also in charge of keeping an eye on these intercompany loans, and it made tracking those payments very, very difficult within the accounts. This particular company and all of the companies, their finances were quite complex. So there were hundreds of transactions every single month. And he was the one with the financial oversight of all of that. So he had the power to divert these funds. There was also work in progress and exchange rates, which clouded the audit picture of the company. So the company would buy goods in dollars and then would often invoice clients months later due to production and shipping issues. And the company also bought both euros and dollars. So he was responsible for recording all of this. He also, for quite a significant time, ensured that each amount that he took was always about £10,000 or less. So it made it quite difficult to detect within the company accounts, and he spread it over a year, which made that detection, quite hard.
And Tamlyn, you're mentioning some numbers there, and like to £10,000. Can you give us a sense of whether it's revenue or something of the size of company we're talking about? Just so, when you sort of say 10,000 was hard to detect.
Yeah, so I mean, the company was dealing with hundreds and hundreds of thousands of transactions all of the time. So on a monthly basis, one of the companies, Hunter, was doing incredibly well, whereas Carbon started to get into financial difficulties. So there was lots of loans from Hunter to Carbon, but because of the amount of transactions going through every single month, and we're talking hundreds and hundreds and hundreds of payments for, it's a marketing company, so they're buying goods, they're putting on events, they're paying different members of staff, part-time staff. So it wasn't easy to detect because of the amount of these transactions. So Carbon then started to get into financial difficulty. So at this time, Vince said to everybody, look, stop using credit cards for Carbon. So no one can use any more credit cards for Carbon. Vince and one of the other directors then started to pour in their own personal money to try and keep the business afloat. Lawless knew this, but despite this, he kept taking money out of the account. On one occasion, Vince discovered that after he said, look, don't use the credit cards, he found a direct debit payment to Barclaycard from Carbon and confronted Lawless and said, why have you done this? And he lied and said, look, I needed to make a payment for a fridge for the business. So Vince believed him. We later find out that payment was actually for the wine for his son's wedding. So there was this trust. So, and in terms of how the fraud was eventually discovered, Vince had then cancelled all of the credit cards for the companies when Carbon started to get into trouble, and he went to the office one day, and the final statement for the credit card was in the office. Prior to that, all of the credit card statements Lawless had arranged to be delivered to his home address, but the final one actually went to the office. So Vince opened it at the time, found all of this personal expenditure for Mr. Lawless, confronted him and said, what on earth is this? Lawless put his hand up at that point and said, I'm so sorry. That was a one-off. I just ran out of money at the end of the month. I'll pay it back, blah, blah, blah. And then Vince started doing some digging afterwards and then realized the extent, certainly of the credit card expenditure. He then instructed forensic accountants to come in and start really, really going through all of the company accounts. And that's when the extent of the fraud became apparent. Now, unfortunately, at this time, Carbon, because of the fraud, had got into such financial difficulties that then went into liquidation. So lots of people lost their jobs, and people that Lawless had worked with for many, many years. So once the extent of fraud was discovered, Vince reported to the police, as you would do. The police said, "So sorry, we don't have the resources to deal with this. And in any event, why don't you just pursue this in the civil courts?" Vince, was outraged that this could happen, and so decided, he really wanted justice here. So he came to us, and we investigated and started a private prosecution. So he was convicted of fraud by abuse of position and theft, and he was eventually sentenced to 7.5 years in prison.
Well, there's a lot to unpick there. There's a lot to unpick there. First of all, when you're describing this, Tamlyn, sadly, this is not uncommon, right? You've got into great detail there, and there's a lot of touch points. You went through the process and the relationships and the trust in that small business that with the people involved, and unfortunately, we see it all the time. Do you just to start that off then? The case was uncovered. The police didn't have the resources to get involved. Is that a common theme that you see? And obviously, from private prosecution perspective, it seems to be a growing sector. Can you just explain, just to unpick for people, what private prosecution actually means and why it was used in this case?
Yeah, sure. Unfortunately, yes, it's really common. I mean, it's very, very hard to get law enforcement to investigate fraud and even prosecute fraud. So in terms of private prosecutions, in the normal course of events, I'm sure everyone here would think the normal course of events is you report to the police investigate, the CPS will prosecute. That's not often the case. So private prosecutions step in where the state don't act. So it is private prosecution is basically any prosecution that isn't brought by the Crown or any other statutory prosecuting authority. England and Wales is one of the only few jurisdictions in the world that allow victims of crime to prosecute in the criminal courts without having to rely on the state. It can be brought by anyone. So any individual, any company, any charity can bring a private prosecution. There's no mystery about them. They act in exactly the same way as a prosecution brought by the state. You have the same obligations on you as a private prosecutor as you would do a state prosecutor. And they are rising and rising and rising. So there's more companies, more charities now bringing them. Macmillan Cancer Research regularly bring private prosecutions because they can't get the state to take on fraud cases. Fraud is now the most common crime type, so accounts for over 40% of all recorded crime. Now, despite that, only there's 86% of fraud cases that go underreported to the police, and of those that are reported, only 7% are then taken on for further investigation, and only 1% of that number is actually prosecuted by the state. So that's why private prosecutions are really taking off.
But private prosecutions have traditionally had a reputation for being the proviso of only being available for people that have deep pockets, right? Because it is a lengthy process. Yeah. In this case, there's a lot of money that's been lost, but actually, how much would it cost to run a private prosecution? It's not insignificant here. It's an investment to make this, especially for a small business that's been hit by the fraud. So you get hit by the loss, and then you're going to have to fund it. Is there any recompense or funding available for people to operate a private prosecution?
Well, private prosecutions are quite unique because the government reimburses the private prosecutor for the costs of bringing a prosecution at the end of the case. Right. And that's irrespective of the result. So even if a defendant is acquitted, the state will reimburse the reasonable costs of bringing that case. And that includes, your investigation costs, so forensic accounting fees, sometimes your own internal costs of having to investigate that particular matter, and prosecuting. So yes, even if the defendant is acquitted, as long as the prosecution has been properly brought and properly conducted, so for example, there's been no major disclosure failings, then you should get your costs back from the state. And the public policy rationale for that is that the victim is stepping into effectively what should be a state function, so they shouldn't be out of pocket for having to do that. So yes, the prosecution has to be funded, but the costs will be recoverable. And in terms of the percentage, it's usually around anywhere between 65% up to 90% of costs are recovered. And where the defendant has benefited financially, you can also apply for a compensation order against the defendant at the end of the case if they're convicted, to compensate the victim for the loss suffered. And there's lots of other things you can do, but they're quite, you can get restraint orders to prevent dissipation of assets, which is a whole other seminar. But yeah, there's lots of things you can do as a private prosecutor, and you can recover those costs.
Fascinating. I wasn't aware that was the financial structure, that actually at the end you can make a claim. Michael, just to pick on the fact that this fraud was deployed across a group structure, it sounds quite a typical growth path of an early stage business assembling a low budget team. We said Mr. Lawless was on 25k, 24k when he started out. Junior team has grown perhaps by acquisition, the firm's expanded, and now you're left with an organization that's got multiple businesses within the group. You're obviously tackling this problem. You've seen this as an issue. Can you just describe what you've seen in the market and some of the challenges that you see around group structure, reporting, and visibility of finances?
Sure, happy to. If I may, I'd almost take a step back, because I think if we think of where sort of accounting and bookkeeping technology is at, in sort of thinking about fraud and detecting fraud, there's been a sort of both a tailwind and a headwind. So if we think of when Mr. Lawless first started, that was definitely still in the desktop era.
Yeah.
And the desktop era of accounting had two sort of important elements that are worth thinking about here. One is, by definition of being desktop, there was a file that had to be moved around. Now, often that meant either for the smallest of businesses, it might stay at the accountancy firm, or if not that, it was definitely on the computer of a financial controller, a financial director, etc. So the business owner, other operational people didn't have access, or didn't have sort of contiguous access to the file. And the other thing is slightly related to the fact of it wasn't really accessed by the non-core people. It meant the software was highly, highly specialized for those core people. So even if a sort of non-core person, happened to glance over someone's shoulder or, spend a weekend trying to learn it, they would find it incredibly impenetrable. So obviously there's a number of cloud accounting vendors around the world, but Xero is the one that does deserve credit for setting, I guess, sort of the boundaries and standards of what we think of as cloud accounting today. And two things they did was, they made absolutely, in the old days when they first launched, we used to call it a single ledger. And the point being that both the business owner and the accountancy firm and the financial control, they're all logging into the same set of numbers and the same interface. And so that was a difference. And the other difference was they designed software that was meant to be usable by the team. So I think there's one thing that's made fraud in small business from an accounting perspective harder is the advent of cloud accounting, because it does mean the numbers are looked at by a far greater number of people, and the user interfaces are far more accessible, and a lot of the language, and of course there's help centers and things like that. So it's much, much easier. So that's the area where I'd say cloud accounting and accounting software deserves a sort of huge pat on the back on getting this set of data that was very much in the back room and now shining light on it and making it much more accessible. So that has happened. Now, that is let me get my head and tailwinds the right way around. That is the tailwind for making it easier to detect any problems. The headwind is those older packages like Sage 50 that were the desktop packages, they actually encompassed basically a broader range of companies. So even though new companies would go on them, they had an awful lot of functionalities and could scale quite a long way. Whereas the cloud accounting packages like Xero, they're designed for a slightly smaller typical business than the sort of typical sort of desktop package that they've succeeded. And so to come back to your question, what that has meant is that there's quite a lot of businesses out there now that are, I use the phrase sort of stringing together multiple copies of Xero, which is a bit sort of colloquial of me. But basically, it's very common now for a business to actually be operating a number of legal entities, and for each legal entity having a different iteration of the accounting software. So a group that is 5 companies will be having 5 copies of Xero. And so that's become very common in the last sort of 5 or so years, 5 to 10 years. It wasn't so common in sort of the early days of cloud accounting, but pretty common in the last 10 years. And indeed, nowadays, it is very common to find businesses running 10 Xeros, 50 Xeros, even 100 plus Xeros. It is not a rare thing. So there's an awful lot of companies out there that are running their accounting package in this way. Now, as I said, Xero deserves a huge amount of credit for this tailwind and making it accessible, but also their software wasn't designed to be run in this way. It wasn't designed to be run. And so there are gaps there. And so the gaps, Tamlyn, you're talking about from a fraud perspective of things like intercompany absolutely exist in that situation that is happening with tens of thousands of businesses in the UK are running this multi-entity setup of Xero, Sage, QuickBooks, etc., Free Agent, there's others. And what we're doing at Translucent is we're recognizing that this is a risky and inefficient setup. And so what we're building at Translucent is basically a sort of an orchestration piece of software that sits on top and integrates all the individual accounting systems that sit below and brings all the data into one, but also writes back appropriately. So whether it's doing things like consolidated reporting to bring all the numbers into one, or whether it's doing intercompany reconciliation to post all the different, to balance the loan accounts, the APAR accounts, etc. And of course, what becomes really important in that is the audit trail. So for the first time ever, there is then an audit trail of, this intercompany, transaction has been created, this intercompany loan has been reconciled here, who did it, when was it done, etc. And I can't claim that we built Translucent for the fraud use case. We didn't. We built it far more for FCs and FCs just being as efficient as possible on a day-to-day, week-to-week, month-to-month basis. But we're absolutely not unaware that we're beginning to plug those gaps that exist. And those gaps often exist. A lot of these the vast majority of these businesses today running this multi-entity setup, as we describe it, are using Excel. And of course, Excel is fabulous at many things. You can consolidate the books in Excel, but it does not have these audit trails. It doesn't have many of the other functionalities like posting back into companies, the audit trail for intercompany, et cetera, et cetera, et cetera. So that's what we're doing, and I guess that'd be my sort of perspective of cloud accounting has definitely probably made certain types of fraud much harder because the data is much more available. But for those larger businesses running the multi-entity setup, either there's some new fraud opportunities have been created, or some of the old ones still persist as a result.
What's your feel for? What's your feel for that? The sort of legacy systems that are still in the market, or if legacy is the right word, are they still widely used? Because it's quite a cumbersome painful experience to migrate onto a more up-to-date cloud platform if you're if you're a more established business.
It actually isn't. I
No?
would actually say the shift now is demographic. Sorry, the group we're talking about now, it's two groups. By far the largest group is demographic and attitudinal. So if we were to open up the database of Sage 50 users today, the vast majority would skew to an older age range. And the business was probably formed a long time ago. I'd probably venture 20 years ago plus. And what you've got is whether it's the owner or the FD feeling, I've set this up, it works, I don't really want to change it. And, I'm sure they're right in many ways. I think I'd probably make the argument they're missing out on quite a lot of opportunities that modern technology brings. But, that would be a case-to-base discussion to have. So there's definitely a lot of people still using these. Let's not use the term legacy, but let's use desktop systems.
Okay.
They would be making the argument. Sorry, no, let's consider legacy because some of the desktop people have it hosted. So let's go back to legacy. They would make the argument they've set it up, it works, and that's what they're doing. So there's definitely that population. And then slightly related, but slightly differently, and without the demographic skew, there is another group that would say when they've looked at the cloud vendors, there is a specific functionality or set of functionalities that the cloud vendors don't yet replicate that their legacy software has. So I think there's those two groups that are out there. One is a sort of, it ain't broke, don't fix it, and I've got no interest in changing. A bit more sort of attitudinal, and then there would be a slightly sort of feature function. I've got this working in this particular way, and I'm not aware that I can replicate that in the cloud.
Interesting. It's good to get your perspective on that transition and that structure. Tamlyn, just to come back to the case as well on relationships and the longevity that the people involved in this case had known each other and the trust that they had built with each other. What's going through Mr. Lawless's mind when he's ripping off somebody that has given him so much trust and power and has known for so long to be so brazen in his approach for fraud? What's happening there in his mind, do you think? And what have you seen across other frauds that you've worked on?
In that case, and other frauds that we've seen, we don't think that the majority of these types of cases start with an employee having the intention from day one to commit fraud. It's something that tends to happen over a period of time. So there's I don't know if you're aware of the fraud triangle explanation. So criminologist Donald Cressy in the 1970s came up with this fraud triangle as an explanation as to why people in businesses or employees commit fraud. And there are three elements. So the first is the opportunity, whether they're given the opportunity to commit fraud, whether there's an incentive for them to commit fraud, and then they rationalize it, so rationalization. So in Lawless's case, he is given the opportunity. He is the one that has been in control of all of that accounting procedure. He's implicitly trusted. So he can create exactly what he wants within that business, and he's given it complete autonomy. So he's got the opportunity. And then the incentive, in Lawless's case, he clearly has expensive tastes. He likes a lavish lifestyle. He had difficulties at one point within his marriage, and they ended up separating. When they got back together, we could see the extent of the spending increase dramatically. So, there is the incentive for him to keep this lifestyle for himself and his family. And the rationalization aspect, we think there was a slight jealousy probably towards Vince. Vince was very successful. He had a number of successful companies. And often with fraudsters, and certainly in these types of internal frauds, they can think, they think their worth is more than perhaps what everyone else thinks it is. They think that they should be either on more money, have bigger bonuses. They think, oh, I could do your job. So he might have think I could do Vince's job. I deserve more. So I want more money. And why have you got this? And then they rationalize it. Well, I'm just going to take a little bit here. I'm just going to take a little bit there. It's not making a difference. And then it just gets out of control. And there doesn't seem to be any guilt or consideration for other people. So certainly in Lawless's case, he was really good friends with not just Vince, but some of the other directors and employees within his team who lost their jobs. So yeah, it's and over a period of time, this real gaining of trust from someone, where there's no longer those checks and balances in place. I think, that occurs in this case and across lots of cases.
It's very hard for small business to put in place demarcation of responsibility, or even have the motivation to demark that responsibility when you have a relationship with somebody and you've gone on a journey of building something with somebody. I saw a case recently where there was the headline was that she was a grandmother that had defrauded the school she was working for. She'd been working there for 7 years, and had defrauded the school of a couple of $100,000. And it is difficult. It is a subjective relationship that we have with our teams when you are starting a business and we're running a company, and that trust is quite easily gained. Just to switch to technology, and Michael, you've touched on it a little bit around some of the advancements in cloud. In cloud accounting, how that's helped provide a single source of truth, which in the security world is what we always strive for. There is a transition, and from the talks that I've seen and the exposure to the industry around using technology to automate as much of the accounting and bookkeeping processes as possible. And obviously, you were a pioneer in that space. How is that evolving? And is there an argument to say that actually more automation means less eyes on things, less humans interrogating things, and more of the ability to obscure and hide fraud because the software's supposedly doing it? Or do you think it's providing more visibility and strengthening fraud resilience? What's your sort of opinion around the growing adoption of tech in the accounting procedures?
Yeah, I'd love to give a clean and easy answer. The reality is it's sort of doing both, because let's look at the biggest productivity gain in bookkeeping and accounting over the last 2 decades, it's the bank feed. And so for those that aren't familiar, what the bank feed is previously to add all the bank transactions to the accounting software was a much more manual task, whether sort of uploading from Excel or indeed writing in one by one the individual transactions. And what the bank feed is an integration between the accounting software and the bank, so it pulls down the transactions. So that's been sort of the biggest productivity gain that's come from cloud accounting. There have been others, but that's the biggest. And that's a good one to pick on here, because what it does mean is that you have an automation like that, and it does mean that sort of data feed, that data is available for everyone to see. Anyone can look at it. It's more exposed. There are more eyes on it than ever before, etc. So one way to answer your question is, Oliver, well, definitely means less fraud because, it's here, it's visible, it can be seen. But because it's easier, of course, there is the human tendency to, well, I don't need to look at it. It's just working. It's working away in the background. I don't need to do that. And so you then get a situation where, although in theory more eyes than ever before are on it, in reality less eyes than before are on it. And that is going to be an interesting thing that's going to continue to play out more and more with AI. So we're bringing a number of sort of automations to group companies and multi-entities. And one of the key things is always the audit log and the right volume of alerts of sort of say, look, this has been done. And, it's going to be interesting. I haven't really got enough data yet to see what level of alerts that people want and actually use. So one of the things, like, we don't even have to touch on AI, but we'll touch on AI briefly here, just because in the software industry, there's a lot of belief that AI will change the way software is paid for. From instead of paying for an application, you'll pay for work that's been done. And so it might change the business model of software. And that may or may not be true, but if we assume AI means the work is done for you, it does bring up this point of how often do you check it? How do you check it? Are the checks good enough? Et cetera, et cetera. So I'd love to give you an easy, clean answer. There's no question it is both, because technology simultaneously gives you the benefit to see more, look more forensically, have easier access to what's happening. But because it's all easier, human nature will be to look less.
Mm. Mm. I don't think there is a right or wrong answer. I think you've summarized some of the challenges really well there. Tamlyn, we talked about private prosecutions and then what's involved. And I think it's been really enlightening there. What is the initial process people should follow? Because accountants will be the first people that a small business will call when something isn't right, to say, I'm a small business owner, discover someone in the company that's got some fake employees, or there's some dodgy expenses, or something that isn't right. And if they want clarification, it would normally be the accountant that would be the first person they ring. What is the initial stage of process that the accountant should follow, and who should they draft in? Obviously, calling a legal help, but what is that process from that initial phone call to be able to support clients when the client think there's something going on?
I think the first most important thing is the preservation of evidence. So often there's a huge amount of evidence that is going to be contained on the company servers. There might be a specific device, phones, that have been used by the suspected fraudster. So it's very important to get hold of those devices as quickly as possible and to forensically image those devices. So one of the things that I often see as a difficulty is that when there's a suspicion of fraud, the devices are then opened by other employees within the business to try and figure out exactly what's happened. And sometimes that can result in issues later down the line if a fraud is uncovered and you need to rely on that. So I would definitely say consideration at a very early stage of imaging the devices so that they can then be properly interrogated. Often in these cases, a forensic accountant is essential, again, from an early stage to see where do you direct your attention on this. There'll obviously be issues in employment issues. So an employment lawyer will probably have to be drafted in to deal with the employment side. And again, really building up the evidential picture of exactly what's happened. So inevitably, lawyers will have to be involved. There'll have to be a proper internal investigation conducted both with the business, but also can be external investigators that come in to assist, because often investigating exactly what went wrong can be very time consuming for a business, and they don't have the time to do it. So it can be important to get investigators on board and come up with a very detailed investigation plan from day one, so it can all be traced back if it's later challenged exactly what happened. Because fraudsters will always, as in the Lawless case, they will often attack the victim later down the line. So in the Lawless case, his defense was that Vince had given him permission to use the company bank account for his own personal expenses. So he didn't deny the expenses, but he said that he was given permission and that everyone in the business was doing this. And it was a big kind of VAT scam. And he accused Vince of tax fraud and all the rest of it. And part of his defense, he said that the permission email that he was given, where he was given apparently consent to use the company as his piggy bank, was in an email on the company server. So that required us to have to search through, hundreds of thousands of emails to try and find this mysterious email that never existed. So it's, again, really important to preserve that at the very beginning.
Which is quite often, from a security standpoint, the the knee-jerk reaction is to change passwords and to lock people out and to stop things, but quite often that's not the case, is it? You need to, as you say, preserve the evidence and keep things as normal as possible whilst the investigation is underway.
Yeah, although there's nothing, I mean, if you have enough evidence at that stage to say, something has been done, then you definitely need to lock that person out of the system. But at the same time, you need to, you have to preserve that evidence. And, you need the return of the devices. So again, you'll have to be strategic about whether the person's in the office on that day, because you really need to get the devices back, phones, because they will inevitably have a lot of evidence. I mean, Lawless's, for example, we had so many emails which were really helpful to be able to prove the fraud, because he was using his company email account to book tickets for things, for example, so we could match things up.
We're just going to switch to Q&A because we've got a few questions that have come in, and I'm conscious of time. We need to try and rattle a few of these, if that's okay. So the first question is around audits, so internal or annual audits. Why don't they go deep enough to check for these types of transactions? And in this case, were there audits that are undertaken? And Michael, you may have some thoughts on auditing as well around, is it just a tick box exercise that people go through, or quite often we'll hear the big firms, big auditing firms get a slap on the wrist for missing frauds. I mean, there was one yesterday, a huge one that got uncovered. Why don't they go deep enough? And do we have any sort of opinions on that? Tamlyn, I'll start with you, and maybe Michael, you could share your thoughts on it.
Yeah, I mean, certainly, but in this particular case, so Lawless was the one that was in charge of speaking with the auditors and providing all the financial information to the auditors. Often we see these cases across the board where these frauds are just not picked up in regular audits. Yes, it could be a tick box exercise in some circumstances, but also it's also about, I mean, certainly with Lawless's case, the way that the systems were designed made it very complicated to be able to be picked up on a regular, quick audit. And we do see that happen across a lot of the other cases that we deal with, where it is a financial controller or an accountant within the business that is able to manipulate the data. But you do see these in some of the huge frauds that are investigated by the SFO, that they're not picked up on an audit. And you've got the difficulty with the relationship between the accounting firm and the business. They don't want to lose the business. There's a lot, a lot within that.
Michael, do you think obviously technology can help with auditing? Because there's almost a permanent audit that could be happening in the background with software. What's your sort of take on that?
Just before may I ask a question of the two of you, just sort of, it's like, just because this case, it feels so egregious, and I'd love the two of you to sort of, is that how typical is that? Like, because it obviously makes it easier to discuss in a sort of forum like this, but it does this almost make it sort of atypical that it's sort of champagne lifestyle, incredibly high numbers, and is that typical, or is actually normally it's a lot more subtle? Or I'd love to sort of just get that sense before I answer, if I may.
Tamlyn, I'll let you lead on that one.
Yeah.
I'll jump in as well. But
well, as a fraud prosecutor, I probably see the worst of these cases, but I wouldn't say it's rare by any stretch of the imagination. I think often what can happen is that a fraud like this is uncovered. It's not necessarily prosecuted. So we see a lot of cases where businesses have suffered from internal fraud and they don't want to publicly admit that that's what's happened, or they don't want to spend the time on having to really investigate and uncover the extent of the fraud. So often there's an NDA signed between them and the fraudster, who then will go off often to then commit fraud on the next company. And we see that happen quite a lot. And the kind of champagne lifestyle, a lot of fraudsters, when it's this extent, that's exactly what they do. They will spend the money on a lavish lifestyle. And that is not unusual, buying cars, spending money on their children's education, or all from company money. So I do see the worst of it, but I wouldn't say it is a unique case.
To give you some stats, Michael, the Association of Certified Fraud Examiners came out with a report this year that said businesses lose 5% of their revenue to fraud every year. So it is not uncommon for companies. In fact, most companies will suffer a form of fraud. Now we're talking today about internal fraud, but obviously there's external fraud around fake invoices being sent in, external factors, bid rigging, backhanders, bribery, corruption, all that sort of stuff. It is rife, more so in different industries. But is this case typical where someone's got a lavish lifestyle? Absolutely. I was told about a case only 6 months ago where somebody had stolen £9 million from a hedge fund, and the hedge fund didn't want to prosecute. They didn't want to do anything. They just want to sweep it under the carpet because, as Tamlyn said, the reputational damage for that case would be bigger than the loss. So they didn't actually follow up with the prosecution. So we just see the tip of the iceberg. The stuff that gets reported, people have the motivation to follow through. The stuff that our software identifies, gives us a better feel for the scale of the problem. But we're seeing fraud alerts all the time, so it's very common.
Right. So what I'd say around the audit in the external accountancy firm, because of course I think there's two separate checks and balances maybe there. There is the annual audit, whether voluntarily submitted to or regulatorily required, and then there is having an ongoing relationship with an external firm, whether for the production of management accounts or other sort of tasks that may be sort of wanted. And I definitely hear the frustration from auditors that they feel the rules have become more and more checkbox orientated and gives them less and less latitude for curiosity and time to go down rabbit holes, etc. So I wouldn't, it's not an area I would claim any expertise, but I've definitely heard that again and again from people in the profession that they feel that it's gone in that direction. And indeed, every time there's another big scandal, it almost makes the problem worse because it adds a few more check boxes to the list, rather than, sort of just allowing latitude back. And then I think the other thing is as I sort of touched on it, is having an external relationship, which I would have thought would be a good part of a fraud prevention strategy, of making sure that part of the financial operations of a business are outsourced to a firm, because then of course there is another set of eyes looking at things, etc. But everything does come down to trust, and as we've been discussing this, I've been thinking about my business. We're a multi-entity business with big numbers involved, and there's people I just trust. They've got access to the bank accounts, and I'm pretty sure, touch wood, fingers crossed, etc. We're not one of these, but there's a lot of trust involved.
There is. On that point, we were asked to put in a notification when bookkeeping is being done by one person over a 3-month period without a break, so that we can notify the accountant to say, look, there's an advisory here that only one person is doing all your reconciliation, and that's a risk. They want to they should have a holiday. Quite often, it's when someone's on holiday or there's a break in employment that where frauds are discovered because someone else is picking things up. That's really important for advisors on the call to be mindful of with their clients, to say, look, one person shouldn't be doing everything. They should be away from the business. It works in the finance sector.
Yeah, I remember it used to be, again, I'm out of data, but it used to be a requirement if you were an FD or a CFO, sorry, not requirement, but a heavily suggested recommendation that an FD or a CFO has to take a minimum 2-week holiday break at one point in the year, as you say, so that someone else is forced to come in and look, because I think a thing was, just a day here, a day, they'd split up the holiday.
Yeah.
And therefore they've always got control. But
yeah, I mean, it happens in the finance sector, in the trading and finance sector quite widely. I've got another question here just to touch on around the failure to prevent fraud offence and what that means for the accounting industry. So just to set the scene, Tamlyn, you'll probably have more insights than I do, but this is a new government offence that is actually putting the onus on people that run companies, the directors and senior managers within an organization, is if there is a fraud committed within their company that's for the benefit of the business, whether they were involved or not, senior managers and directors can actually be prosecuted for not putting the right measures in place to identify fraud. Now that covers people, advisors and people that are empowered to undertake work on behalf of a business, which arguably accountants are, because they're posting and filing accounts and undertaking activity for that business. Tamlyn, could you just give us a quick oversight on what that offence means and whether it does affect actually accountants are going to be bundled into that mix?
Yeah, well, I mean, it's specifically limited to large organizations. So, using the Lawless case, for example, that wouldn't apply. So, and it could potentially apply to accountants, subsidiaries. It applies to employees, agents of the particular company, if they've committed fraud with the intention of benefiting that particular organization. So the government have recently just released some guidance to companies as to what measures they now need to put in place. I believe it came out last week. I haven't been through that particular guidance in detail yet, but yes, that's something that all very large organizations do need to be aware of, because it's certainly a risk for the future. I mean, I'm often asked whether that particular offence will mean that private prosecutions will rise, because there will be certainly all interested groups. NGOs might be particularly interested in this offence, with holding particular companies to account. So we will see, but it is limited to very large organizations.
Right, but it's also it's a bit like GDPR, right? At the start, the big companies, and I can't remember the name of the chap who was quoted, but he was saying this is a good starting point. So it could well cascade down to smaller businesses. And if you're in the supply chain of a big organization, even if you're in a investment portfolio of a bigger business as well, I wonder if there's scope there. It's an interesting evolution, putting the onus on the business owner rather than, the more business owners will go to prison than the actual criminals to committing the fraud by the sound of it. But there we go.
We'll see.
I'm absolutely gutted. We're slightly over on time, and I'm conscious that we need to wrap up. I just want to say a huge thank you, Tamlyn and Michael, for joining us today. I think you've been really enlightening and really valuable contributors to the session, and I think people will go away with lots of thoughts and maybe some more questions. So how can people reach out to you if they want to get hold of you? Tamlyn can come up from me, put your LinkedIn profile on the post.
Yeah.
I'm going to post this video. Michael, are you happy with that as well? If I just
please do,
share your details, and can people contact you through LinkedIn if they've got any questions? Okay, brilliant. Well, thank you so much both. We'll wrap up there. And I hope everybody's enjoyed the session, and we'll look forward to seeing you again soon.
Thank you.
Thanks a lot. Thanks.
Cheers. Thanks. Bye-bye.
Bye.